Good morning, good afternoon, and good evening. Welcome to today's quick update. We are quickly going to go through the updates and see what the market have for us. It's pretty been a consolidation week for us. Market has been correcting and been moving sideways, and so we're going to have a look and see what opportunity next week is going to present. This is DXY monthly candle. So you can see that the monthly candle is almost at par, almost fully retracing the whole extent of these bullish candle. And if you look at the US dollar index, is pretty much the same on the monthly. We are taught that we needed a correction. In fact, on the DXY, it has actually retraced. I'm sorry, on the US dollar index, it has retraced equally on the US dollar index. So this is bearish, and this is, if it closed like this, is a good price action. But what we are hoping we are going to have is a correction. So to what level do we expect that correction? We are going to dissect from the monthly, from the weekly to find levels, because there has not been a new place up here for us to create a monthly move to the downside. So we are going to turn to the weekly to find those levels. Will the price go up again and take the top? It's most unlikely. So we are about, in a new move to downside, probably we are looking at having an ABC correction to the upside for us to turn more downward. So now go to the DXY once again, and let's begin to dig down. The most likely level. But when we give you support and area, a support and resistance area on the weekly, is just to guide you. It doesn't mean that is where price is going to tick. So let's go into the weekly. At times you don't understand what we mean by those areas of support and resistance. So now this is the weekly candle. We are looking at which area in the DXY here we are going to probably have to see reactions. So this is a major resistance area. So, and if we are going to draw that zone of resistance where we expect liquidation to take place, or the area of the supply, is going to be in this area. I want you to watch. Let me zoom out. So it's going to be in this area. Now, between this table here, where you have a full closure, and this wick. So we don't expect price to go beyond this area before we turn to the downside again. So that area where we have a proper closure is the first area, which I can probably use broken line for here now. I'm going to use broken line for. So the second area will be at the peak of this bullish candle, the wick. So we don't expect price to break that level, because that will be like a primary place to the upside. So we don't expect price to break that level. So we have those level marked. So with that said, with this level marked, then let's go to the daily. I think going to the daily, because it's going to be the same for the US dollar index. Going to the daily, what do we have on the daily? So on the daily, this is what had been happening. We have this wave, probably maybe it has completed 5 weeks to the downside, but this is going up as a correction. this move is very corrective. Now, another question anybody may want to ask me is that, does this look like a wave 4 if this is a wave 1? In fact, on the DXY, it doesn't look like that. So if this is a wave 1 and a wave 2 and a wave 3, so it doesn't look like that. So we need to see what this one is going to give us. Are we coming down right now, right away to break this low? I do not think so. But if price wants to do that, we'll see. This is corrective. At the end of the day, we might have a double correction to the upside without breaking this level. So let's see those levels again if I bring out the drawing. These are the area of supply for us to come to the downside again. So it's well marked. We can see price is approaching. We may have a turnaround again around this area if price will not go bearish. But I'm going to do a more detailed analysis on Euro USD. So that is what we have. That is what we have. And if we look at it again on the 4-hour time frame, this wave so far, what it has done on the 4-hour time frame, let's see, is pretty much corrective. That's what it has done. So it's pretty much corrective. So this is what has happened so far. It's pretty much corrective. This may be seen as an A, a B, probably a C. It could be an A, B, C of a W. And this coming to the downside may just form an X for us to have one more correction to the upside, because this looks incomplete. This is not wave 4. This is not wave 4. It doesn't look like a wave 4. It doesn't look like a wave 4, but we need to see what it's giving us and what is going to happen. We need to take it one after the other. This is a low, this is an high, this is a low, and this is a new high, and this is coming down. When you are having a double correction, we must know what to expect, that if indeed we are going to break the low again, so we are going to look at the whole movement from here to here, that this correction to the downside should not take up 76.5 to the downside. Once that level is taken to the downside, we are going down again. So if we turn to the DXY, it's the same. It's the same on the weekly. Turning to the DXY, sorry, US dollar index rather. US dollar index. So US dollar index. So going to the weekly to find those level of resistance the same way. These are the areas we expect price not to break. So we'll be paying attention to the kind of correction price is going to have in those areas. It's pretty much the same correction that is going on, except that the price is being able to cap the monthly support. So it's the same now. We've broken out of this wave, which means that we are going for a larger correction now. So now, just like we said, this is what it has been so far. This is the corrective wave going up. So we have an up here, A, and a low, and this is another I. So will the price go down? We'll see. But at the end of the day, we might be seeing a double correction to correct the entire run to from the top to the bottom here. It looks so much that is what it's looking like. There's not been any impulse here. So you must be very careful to say you want to sell right from this level. Probably you could look for your buy, when price comes down the more, we look for our buy to go up again. So that is what I can see that is happening now. We are going to be looking for, a buy to the upside. Let's take this to euro dollar, where we want to dwell. So price has been corrective so far, and that is what we are seeing. So in euro dollar, it's a bit more we need to transfer our knowledge on the DXY and US dollar index to what we are seeing. So this is euro dollar across board now. So where is the weekly? This is what is funny here. So you have to look at the weekly support around this area. The support here and the top here and this week. So we want to see how price would navigate those areas. And I might be changing this color to something that's different from what because I'd use that color a lot. Let me change this to a green. This green, okay? So then the other level will be at the tip of this, with the wick of this candle here, that doji candle at that level. So that is what we have. Now, going to the daily candle, the daily candle is corrective. So we can see this is highly corrective. This is highly corrective. It's very, very corrective. Now, if you want to look at this, we may have said that this is a 1, this is a 2, probably a 3 and a 4 had occurred, or we felt that could this be a 4 and that we're going to break up to have a 5? At times we may want to think that way. But one thing that we must know about the amplitude of wave 2 and wave 4 correction is this, and the number of days it takes for us to have those corrections. For instance, if your wave 2 of a particular time frame took you like 21 days to correct, wave 2 usually it's bigger than wave 4. So if it took you like 21 days, you should expect that probably wave 4 is going to take like 14 days. So if your wave 2 took you like, let's say 7 days, probably your wave 4 is going to take you like 3.5 or thereabout days, or 4 days. That is usually like that. That's in terms of the number of days it's going to take. And that's one of the clues that you can tell, are we doing with 4? Then again, the amplitude of correction, because with 2 amplitude of correction, it's deeper, but with 4 is very shallow. It's very shallow, more like a straight line correction, horizontal correction. So now, if you're going to look at this, I'm just teaching us something like a clue based on the candle formation. This is the daily candle. Now, we have, from this point, we may have thought that this the whole thing started from here, but let's look at wave 2. Now, the wave 2 here took from this height, 1, 2, 3, 4. So like 4 days. From this eye, 1, 2, 3, 4. So it took 4 days to the downside. Now, if we are taught that this is wave 4, let's count. This is 1, 2, 3, 4, 5, 6, 7. It couldn't have been. It couldn't have been. So that is one of the clues that we should ask ourselves. Wave 4 will not take more time than wave 2 in terms of the pips. That's going to be the amplitude. It's more on wave 2 than wave 4. Probably from here to here would have been your wave 4 in terms of an amplitude, and the number of days would have been 1, 2, 3 at least against 4, or a 1, 2. So if we are thinking that way with what I just said, so this may just be like a wave 4 here and a truncation of wave 5 in this regard, and now we are seeing an ABC correction to still go down. But be that as it may, we believe that these may not have finished. We are still in correction until something is taken. So now we are going to go into more details now by bringing out our drawing. Now, we are taught that if we are going to correct, we are correcting against this level here. Price may break it. It's just a guideline. It's a guideline. The kind of correction that comes from here to the downside will tell where price is going to, because all these areas can be an area of liquidity. So we must know, just checking the weekly support and resistance is just to give us an idea. So if you want to really look at it, right from this bottom now, going to the top here, the mark area falls within a 50 and a 61.8. So price may slightly push below this place to grab liquidity, but all these areas of 76 are still area of liquidity. We must know that. We must know that. Will the price come to this level, or will it just halt around this area? This wave that is building up here will tell. And will this wave going up, is it the end? Are we going up again to break the top? We will see. I favor us going more to the downside to this area to correct the entire run. That is what I favor more. So I favor more that this may just be a W, and this will just go up as an X for us to have another 1 week of nonsense to come to the downside to grab more liquidity before we go up. Now, let's go deeper into it and how to plan and execute our trade. If you are looking at structures, what to do is that you have to really be tight on your analysis, because you don't want to gift money to the market uselessly. What I just said here is that this looks more like an ABC of wave 4, and a couple of things are going to change here. So this looks more like an A, B, a C of wave 4, which is a zigzag here for us to have these. And these run in 5 ways to the upside, which looks like a truncated 5. So with that said, a couple of things probably is going to change. A couple of things might change, but we need to see what is going to change. For now, on the higher time frame, it will still be nice for us to consider this move from this top here with this as an A, B, and a C on the higher time frame. It will still be nice. So anyhow you look at it on the higher time frame, an ABC here will eventually form your W. And this that is going up like this, we are looking for this for more upside, probably for us to see an X. So in trying to see an X, we are looking at a push between a B and a C here. If we are looking for that push, or that we consider, because we see these more like a wave 5 truncation. So if we take it from here down to the low, so the 76 area is the area of green which price may still come up to grab liquidity before come to the downside. And this area will be the last area that the price should not break, which is a primary to this wave. This is 5 waves, because we are going to look at this wave. 1, 2 is a 5 waves to the downside to complete this wave, to complete this move. And that is what we have now. So we see this as going up more. Our price breaking here means that the price is going up again. So you must know that price breaking here means that the price is going up again. So if we take this as a wave 5, but again, if you are not sure and you want to take from the entire length from here down to this point as where to look for to put your stop loss, the entire run, this is still the area of 76, is still the same area. Yeah, for 76 was here, taken from B to C, but from the top here down, 76 is still around the area where you want to have your stop loss. So if anything at all, like 5 pips above this line, it's good. In case you don't have the time and you want to use this place as a place of your trigger, your entry. So you don't want to give price or give the market anything in case you are wrong. So from here to down to this place of green, it's about 9.5 pips. So which is okay, it's less than 10 pips. That's the way I manage my trade. So it's very small. It's very small. And that's the way I manage my trade. So we are looking at the possibility of price having an X here. And once we begin to break down again, once we cross and we take off these, once we take off this support here, I mean, price is going down again to give us that bigger correction. So that is what I can see here. I think I won't do more than that here. I won't do more than that here. Now, let's look at New Zealand dollar. What New Zealand dollar is offering us. Let's go to the weekly. I'm going to spend more time on gold. New Zealand dollar on the weekly, the same approach if you are trading it. New Zealand dollar, the same approach if you are trading it. So we're going to look for those areas of support. In this case, it's almost the same. It's almost the same. We're looking at this area where we have the full closure here. This area here. And the area where we have that long wick. This area here. All these are just to guide us to what the price may do and how to correct. So looking at the candle, you can see it probably is forming a doji. It's forming a doji. We may not break above this candle again, but correct more to the downside to this area before we go up again. So we must be ready. So we are looking for correction. We are not really looking for a buy, Going to the daily time frame, it's been highly corrective Here, what has price done? We have this, and price came down here, broke this. So most likely, in euro dollar, we had a truncated 5, and it looked like we had, a leading diagonal, or where the with 5 broke up above the height of 3 here to set up a new high here. So now it seems that we are having this correction. So we may be having a double correction to the downside, but once we break above a certain level, just like euro dollar, we know that it's up, we are going up again. And just like I said in my theory of a wave 4, so we know from this level how many candles we had, how many candles we had here. So and the amplitude of correction here, very small compared to this from here to this area. So those are the things we need to guide ourselves. Now, going for the 4-hour time frame. Now, the 4-hour time frame here, all you can do here in this time frame, because this is still bullish, there is nothing yet to tell us that the price wants to come to downside. It's still bullish. So all you can do, we see this after this move, the price came down to take this low again, took the high here, got everybody out, came back down to take the low. So we may see this flash move to the downside as a wave 1, and this may just be an ABC correction to the upside. It looks more like that to me. An ABC correction probably may just look at a zigzag to the upside. This A and a B is at about 88 or 76. An equal arm at least to the upside is where we have this. So we may just be having a reaction around this area of 61385 for more downside, at least to have some decent correction to come to this area. That is what I can see here. But a breakout of this area means that we are going up again. So if you are looking for your buy this area, very small tight stop loss for you to, line your stop loss around this area. How many pips? That's about less than 6 pips. Probably 2 pips are above that line. It's what you need. So looking for entry, planning entries, this is what we need to do to plan our entry in case price is going to move against us. So let me try to zoom in for us to do a more analysis here. This looks like an ABC, like I said, which is a zigzag. But taking it from this level, from the top to the low of what we expect, at least the height of wave 2 normally, forgetting and neglecting the correction in between. So the 76, it's up here, and this is the 88, which means price is not to break this if we are to come down. So your 2 pips around sitting up above this is good for you to have your stop loss and your area of entry. But you have to continue to look at this area because price may strongly react in this vicinity. The 100 is slightly below or slightly above 80, 78.6. So, but you must watch yourself. You must watch yourself. But this is not ready to go down yet. It's not ready to go down yet. So that is what we can see here, that you may go and look at the correction and see what is it likely going to be. Once we break on the 1-hour time frame, do we have a resistance to or a support to break? So once you break that support, then you may be looking for your, so we have this support to break on. Yeah, we have that support to break. We have that support to break. This is the height so far, but this looked more likely to go more up. So 1-hour time frame, lower time frame is not enough for you to plan your entry. You have to look at the 1-hour time frame and as well as 4-hour time frame at least to plan your entry. So this still looks a bit more upside on New Zealand dollar. So I'm going to go to gold now. I'm going to go to gold. And that's where I need to spend more time on gold. Let's look at the monthly on gold. So on gold, let me pick this. So on gold is still very bullish. You can see we may not see anything. On gold is still very bullish here. Now, and we have said a whole lot of things. Let me see. We have said a whole lot of things here that we have a wave 1 and a wave 2 around this area. This is a wave 3, a wave 1, a wave 2, a wave 3, and a wave 4, big 4, and the whole of this is a big 5. The whole of this is a big 5. So some people might just see it as 3 wave, which is 1, 2, and a 3. But if you look inside, you'll see that it's more like a 1, 2, a 3, a 4, and a big 5. So looking at this wave, we can also see that within this wave B, a 5, this is monthly candle, which is the last 5 here. We can see a 1, A, B, C of a 2, and a 3. One thing you have to know if you are doing a wave 3 is that your wave 3 must mark up to at least 161.8. So from down to the top here, it marked up to 161.8, and we had a big fall. From here to here, it marked up to 161.8 around this area and broke it to have 5, and we now have ABC of another 4 here. So we are within this area. We are seeing this as a 1 and a 2. Because we are seeing this as a 1 and a 2, a 161.8 is not yet complete. So because it's not yet complete, we believe that this wave to the upside is not complete because it's bullish. So it's bullish. It's bullish. I hope you got what I said. This marked up. Let's go to where I did my analysis. I use a handle. So I use a handle from this bottom here. This marks at about 50%, and this is like a 3 and a 4. It's 161.8 around this area, a 4 here, and the last 5 we are going to also run 1, 2, 3, 4, 5 to the upside. Now, let's now concentrate in this area. So what are we doing? If we believe that a 4 of this new move is here, and we are seeing this as a 2 and a 3, this is a 50 retracement. At a 50 retracement, a 161.8 is not up. Let me go to the daily time frame. Going to the daily time frame. So we will see what we have here on the daily time frame. So this is the wave here, a 192. And if you look at this at a 192 and you are looking for your 161.8 from that low to this high and back to where your 2 is around this area, 161.8 is still up here. Price is not yet there. Price is not yet there. So that is one clue that this is still so much bullish. So now, what should we have? What we have, since we're not going to see anything on the monthly time frame, this high On the monthly time frame, we said it looks bullish. We have to look at the candle before anything. So you can see it looks bullish. On the weekly time frame, what do we have on gold? On the weekly time frame, this is what we have, a correction. And if price is going to really come down and change trend for a bigger ABC, it's supposed to give us a clear divergence, which is not what we are getting right now. So number one, we are not getting a clear, we can't, at the end of this very powerful bullish move to the upside, and we are going to get a divergence that will slope, at least slope across. This is not what we need to get. And again, we are yet to hit 161.8. So we see this move at an internal correction of wave 3 to give us an A of that 4 of 3, a B, and a C. Then after this C, we're supposed to now have the last wave of 5, which will now give us a clear divergence to hit at least at 161.8. And that is what we can see on gold. An A, B, and a C. Now, what kind of correction do we have here? If I go to look at this on the weekly. On the weekly here, we may have seen that this may be a 5 and a truncation here and A, B, and a C. But the best approach is to see that the whole movement from here down here, it's an A, this is a B. Now, if you look at the retracement from here, from this level to this level, it is actually at about 123. So, and if that is a 123, what you can expect is to have, to have a running flat to the downside. This is a correction, a spread out correction. This is a wave. This is highly impulsive. So if you're not careful, when you want to move a wave 1 to the downside, we expect an highly impulsive. But we don't think that it's going to occur this way without giving us an ending diagonal. We don't think so. So what do we think? I think this highly impulsive is what we expect in a wave C of a correction. So this is going to give us a flat. Most likely, we are calling strongly for a running flat on gold. So where don't we want to break now? The levels we don't want to break on gold, going by this also, is here, which is a major area. We don't want to see price break 2300. That's the first place. And the second place is at the wick of this green candle. The wick there, it's very, very shallow area. So if we turn to the daily time frame, turning to the daily time frame. So what do we have here? This is what we said, that this to us is a wave A. So we are seeing these as a wave A, probably a truncation of 5 and a wave A, which is 1, 2, 3 to the downside. And these are, wave B can be anything, can be a zigzag, can be anything. So this had gone up to break up, you know. And when you have a break of a top by a price, it tells you that after a deep correction, you may be going up again. But for most people, the way it came down in an impulsive fashion is what will now, confuse you. For this to have happened this way, I believe this is a wave C of an ABC. So let's begin to bring out the drawing on 4 hour. Let's go and look at 4 hour first before I bring out the drawing for us to see how it looks on a 4 hour time frame. So on a 4 hour time frame, this is how it looks exactly from this move down here and a truncation of this 5 here and a new move of A, B, C to the downside, and this as a daily B or a weekly B, and that this is a C. So bringing out our drawing, a couple of things will change because it will change this from being an A, it's not an A again, because these also would have to be factored in. Let's see. I think it formed perfectly with 8. Because you can see 1, 2, 3. That's 1, 2, 3, exactly at 1, 2, 3 from that point. So now this has become our big A here of that wave 4, because this is a wave 4, and this is like a truncation of 5 here. So this move started from here, and this becomes a B, and we are seeing a C in this area. Okay. With that said, we are picking our movement from here. So we are picking our movement from here and to this area. If I want to use yellow, which I will change later to mark the beginning of what we are dealing with. So the first move is A here and a yellow here as a B. So, and we're going to see a C. So, which means that if you're going to look at that from this point to the top, we want to see our correction within a 61.8, not more than 76. So this is the area that we feel that price may come to before it bounces up to give us a running flat. This is the area. Now we've done a 1 and a 1 and a 2 here, which is expected of highly impulsive, though it's corrective on the higher time frame, and it will confuse people. So some people will be expecting a wave 2 for more downside to break this low. I am not calling that. So what I'm calling it, I see this as a big C. So we have a 1 and a 2 and a 3 and probably a 4. This may break down more to grab the liquidity and turn to the upside. So of course, wave 4 may still hit at this area. If we look at the area of extension of a 2, between 2 and a 3, wave 4. So I think we are about, this may go up, if it goes up from here without breaking this top, this area of resistance, it may come down again to hit this area, and this area, it might not be perfect and bounce up ferociously. That is what we can see on gold. So you must be ready for that move. And before you know it, price will continue to drag up. Take this top one more time, probably at about this top, it may just form like a 1 of the ending diagonal, probably come down to the downside to give us an ABC of a 2, break the top one more, and like that until it burns off. And after that, we might be now be seeing a proper bigger ABC to the downside. So that is what it's looking more likely. So we might not test this area. We might not test this area before price bounces back to the upside. And that is on gold. I think I've dealt with gold for us. Then the last one we're going to look at quickly, JXY. So what is JXY doing? Let me turn to the daily time frame on the JXY. I'm not in this yet. We are taught that this is the first impulse to the upside, but then it is more clearer to me that it is not an impulse. It is not what we think. This is rather an A, B, and the C wave of wave 4. Of course, C wave usually will be an impulse. And so, and all these things, if you don't know, it confuses anyone that does not know about wave and structure. So I cannot agree that this is a wave 4 and we are coming to the downside. Now let's bring out our drawing. If you don't know what it is, you can go to one of the videos I did before now. So we see these as an A, B, and a C. And we felt like we are still coming here to cap this area before we turn to the upside. So in that case, we believe so much that JXY may eat this area of 62.48 or thereabout before we turn to the upside. And if we try to check from this area to where we are turning now, it forms, it closes with a 1, 2, 3, which is expected for wave 5. Because it's going to end, we may not actually come to this area. We may not come to this area. We may not come to this area. We should be expecting a reaction at this after breaking this low, expecting a reaction. So you are going to be looking at your JXY as well as the Euro JPY to decide. Now, anybody could have thought that what this is going to give you, it's going to give you an, if this is your one A, B, C, and to turn up. But what the price did now, the price had broken a level here. Because if you take that, the correction of 4 from here to the top here, from that level to the top here, price already had broken 78. It has broken 78. The last place for price to break will actually be this. So it's not looking like a 1 and a 2. But this being a 1 and a 2, okay, I know, I did something. I took it out. Yeah. So once we cross this area, this correction to come, once it crosses this area, we can't have an A, B, C anymore. So price will be turning more down if we cross this area. But before crossing this area, we may still have an A, B, C of that wave 2 for us to have a wave 3. And so we must know what that is. Let me take this out. I'm giving us too much, really. I'm trying to help us. Now, before I take that out, a retracement to this level of 88, a break below this level of 88 tells us that price is going to take the low again. So we are doing the last wave. So even though it may break it, come to this area and go up, if it's going up, forget, it's not going to climb up to this area, it's going to go down the more because it has broken the extension of possible wave 2 to this wave. So you must know that. You must have all these things as your finger tips. So an extension from here to here would probably be a 161.8 here, so which can still turn this to be an extended flat to the upside. So in case that happens, price may bounce up from here, also take liquidity here, you will think it's going up, come down again to finish with 2 higher here if that happens. But if it continues to go down, it may even give you a zigzag, it may give you anything from here. So we must just continue to wait now. These are trades you don't want to trade. These are things you continue to look at structure to align yourself until the final day, and you know where you want to pitch your tent and go long to go and buy Japanese yen. For now, we are still holding on to see this wave out. Probably will turn down below here. It has broken it maybe at about 1, 2, 3. If it turns out at 1, 2, 3, it may give us a running flat. If it turns out at this area of 161.8, it will give us an extended flat to break a bit higher, then turn down the more. So now let's now look at US dollar yen. And that's where I'm going to end. I've given you more than enough. The structure is a bit different here. It's a bit different here. I'll soon be ending. My network also is messing up. It's difficult to tell what price is printing. Most of the time, it's very, very difficult to tell what price is printing. And so this is the move. After we took this, we add a zigzag to the downside here. And everybody would have thought that, oh, this is the first move of an impulse. Price will go up, come down the more to do a wave 3. And it may be looking like that to you, as if it's an A, B, and a C, and price will turn down. Whatever it is, the JXY is not giving us that. This may turn, to an impulse. We may still have this as an A wave, and this B wave may just give us an A, B, a C, which is probably the last leg of the B in the middle. This ran like a 5 waves. You can see this as an A. This may just be an A of B, a B of B, a C of B, with like a running flat. We now have the 3rd wave breaking the top again. So we need to just continue to watch for what is happening. So using the idea on the JXY and bringing it here. So on the JXY, it's very close to this area. It has broken more than 78 to the upside. Here, it's still far from 61.8. The 61.8, let's go to the 4-hour time frame. So a 61.8 is, let's see, of the old move. From the bottom here, let me use yellow or golden yellow. So a 61.8 price has just hit 61.8. We are coming up to about 85 or 76, which is around this area. So, and this is 88. Once we cross this area, price had already crossed 78 area here on JXY. We need to take this primary. Once we take this primary B out of the way, you should know that the correction is not subject to this anymore, but price is going. So we need to take this to the upside for you to know that this is actually the last wave that is building up. And so that is what I can see. So if anybody wants to trade this, you should just be very careful trading. You don't want to trade this like this. You want this one to go up more and see what it's going to give you, and perhaps come to the downside more, probably to give you a running flat or anything, then go up for the 3rd wave, breaking this. So at the height of the third wave, you may be looking for your sell opportunity on this particular instrument. And would I believe if you want to target your 123 area to 161.8 here now, from here to this level of correction, it may give you a truncated file, it may give you anything. So a 123 is around this area. So, and this is a 127. So these are the areas you should expect price to turn. These are the areas you should expect price to turn. And the price shouldn't do more than a 161.8, which is around this area. The strong area with what dollar yen is giving us, a 165.400, it's really not an area I'll be looking for the action. JSY is very close, so I think anything between here and here, these are the areas you should be looking for your price, and not even this one. Not even this one. So I'll be looking at between here and here, you know, for my price to come back to the downside. So with that said, we have come to the end of today's update. Go and watch it. Bye.